Everything you've been taught about taxes is, well, not the full story. The average person in the United States will pay over 30% of their income in taxes this year. 30%. Now, what if you could legally pay zero? It's possible using a tool that the 1% have used for decades. It's called offshore banking. But wait, this is not what you see in the movies. This is not about hiding suitcases of cash from secret agents. And doing that is illegal. It's called tax evasion. And it lands you in prison. The real purpose of offshore banking, the 100% legal version, is something much smarter. It's about protection. And by the end of this video, you will understand the correct legal way and the critical mistakes you must avoid. Okay, first, we have to get this right. There are two terms that get confused all the time: tax evasion and tax avoidance. Tax evasion is illegal. This is when you deliberately hide income, falsify records, or conceal assets to avoid paying taxes. This is a crime. It's what lands people in jail. Tax avoidance is 100% legal. It is simply using the existing rules of the tax code to your advantage. When you contribute to a 401 to lower your taxable income, that is tax avoidance. When you sell a stock at a loss to offset a gain, that's tax avoidance. It's just smart financial planning. Offshore banking, when done legally, falls into the tax avoidance category. But here's the secret that most people miss. For U.S. citizens, the primary benefit of offshore banking is not about lowering your taxes. Wait, what? That's right. The U.S. is one of only 2 countries in the world, the other is Eritrea, that taxes its citizens on worldwide income. It doesn't matter if you make that money in Omaha or in a bank in Switzerland. You still have to report it and pay taxes on it. So, if you still have to pay taxes, why do it? The single biggest reason is legal asset protection. This is the real secret. Let's imagine a scenario. You run a small business in the U.S. and you get hit with a nasty, frivolous lawsuit. A U.S. judge can issue an order that freezes all your money in your U.S. bank accounts. Instantly, your U.S. bank has to comply. Your life is over, even if you did nothing wrong. But that U.S. judge has no jurisdiction over a bank in, say, the Cayman Islands or Singapore or Switzerland. For a creditor to get that money, they would have to fly to that country, hire a new set of lawyers, and try to win a new case in a foreign court, a court that is often really protective of its depositors. They almost never do this. It's too expensive and too difficult. So, by moving some of your money to an offshore bank, you are protecting it from a broken and lawsuit-happy U.S. legal system. It's a financial firewall. Okay, this is the most important part of the entire video. This is the part that, if you get it wrong, destroys your life. Having an offshore account is 100% legal, as long as tell the U.S. government about it. If you don't, the penalties are massive. There are 2 forms you have to know about: FBAR and FATCA. First is the FBAR. This stands for the Report of Foreign Bank and Financial Accounts. If you are a U.S. person and the total aggregate value of all your foreign accounts is more than $10,000 for even 1 minute during the year, you must file an FBAR. This $10,000 is not per account, it's the total. If you have $5,000 in a London bank and $6,000 in a Tokyo bank, boom, you have to file. This form is filed with FinCEN, the Financial Crimes Enforcement Network, not the IRS. Second is FATCA. This is the Foreign Account Tax Compliance Act. This one is filed with the IRS, right along with your taxes, using Form 8938. The thresholds are higher, but For a single person living in the US, you file if your foreign assets are over $50,000 or $75,000 at any time during the year. And the penalties? If you don't file these, the penalty for failing to file a FATCA form is $10,000. And if you keep ignoring the IRS, it can go up to $50,000. The penalties for willfully failing to file an FBAR are even worse. They can be greater of $165,350 or 50% of the balance in your accounts. Yes, they can take half your money just for not filing a form. This is the pragmatic advisor part. Don't be stupid. Offshore banking is a tool for the responsible. You file the forms every single year. End of story. So, besides asset protection, are there any others legal benefits? Yes, two big ones. First is currency diversifications. Right now, all your wealth is probably in one currency, US dollars. If the dollar has high inflation or loses value, your entire net worth gets weaker. Holding money in an offshore account allows you to hold Swiss francs, Singapore dollars, or euros. It's the financial equivalent of not putting all your eggs in one basket. Second is economic stability. Some countries have banking systems that are, frankly, more stable and conservative than the US system. Banks in places like Switzerland or Liechtenstein are famous for their stability and long-term thinking. Having an account there is like a plan B against political or economic instability in your home country. So, let's review. Offshore banking, when done legally, is not about never paying taxes. It's about legal asset protection, currency diversification, and stability. It's a 100% legal strategy. As long as you report everything and pay the US taxes you owe on your worldwide income. So, now you know how the wealthy legally protect their assets outside the US using offshore accounts. But this is only one part of the puzzle. The other part is how they structure their assets inside the US. They use a specific legal structure called an LLC to protect their property, their businesses, and their investments from those same lawsuits. You know, the offshore banking strategy is often combined with a domestic LLC to create a financial fortress. I've made a full step-by-step video explaining exactly how to set up your own LLC for asset protection. Click the video on your screen right now to watch that next.